following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I hope you guys got some sleep. Staying up watching this crazy thing last night. Man, both of them are just deplorable. I mean, one of them can't seem to, at the end, he started off pretty well and then got back to par for the course. And the other one is just sad to me. Just not a lot of confidence there, put it that way. So the first debate is over, and the market's kind of, a little bit leaning towards Hillary, I guess. He's been declared to some degree the winner. And the S&Ps are up 5. They were up, quite a bit more, actually. Gold was actually kind of selling off based on this a little bit, and now it's come back up just a tad. So I'm personally still long and strong gold, loving this. 1331 stops below there, and the S&Ps, a little bit of volatility here. That 2149.50 area, that daily unfair high is a big number now. It's kind of disheartening, I guess, for the longs that, if Hillary's declared the winner, that, we haven't really stayed higher. There's just more to come on this one. And there's quite a few things out there other than just the politics of the world that are currently affecting the S&Ps. You got some people that have come out, namely, let me just see. Who came out with this news? I was looking at it earlier. Anyway, some global reduction in forecasts. You've also got the oil situation, which we're going to talk about. They kind of just scrapped all dreams of cutting supply, it seems like, between Saudi Arabia and Iran. So, oil, I've talked about this, not really getting too happy on the long side here. And lo and behold, we're starting to kind of come down and 40 to $50 is kind of the range here, but getting below 44.85. I told you before, I thought we could easily get down to 41.89 just to kind of squeeze some folks down on this one. Not a big fan of being long oil right now, and it seems like things are going to kind of stay par for the course. Talked to Mustafa actually the other day, and it's kind of a different scene in Saudi Arabia for the first time in a long time. They've decided that a lot of folks work for the government there, and they've basically said they're going to have a 20% scale back in financial perks for public sector employees. It's a drastic step. I think it's first ever pay cuts for government employees, make up about 2/3 of working Saudis. So 2/3 of the entire population of Saudi Arabia, and that includes Mustafa, I believe, are going to get pay cuts. And I think they've got it in their plan. Oil's got to actually be above 60 to really kind of make things work on a at least break-even basis to where it was, and that's just not happening, and that says a lot, because that says that those folks believe that oil's not going to be back up to that lofty range of $60 a barrel for a while. So kind of preparing for the worst here. Talks are kind of getting dismantled about cutting production at this stage, and oil, I don't think, has a lot of hopes other than to meet that 41.89 down there. Beans are kind of hanging in there around that 944, 945 area that we've talked about. Here's the snapshot. But again, that long term, I mean, and you don't, man, this is exactly what you don't want to see, a little bit of a blip off of that area. And, you just don't want to see this thing crowded and not want to get away from it. We're already below weekly unfair lows, 964, 965. Beans, I think, is a pretty safe bet to go lower here. Again, we kind of had a little bit of a violent reaction off that 945 before, but talked about being able to get down below 983 and then kind of retrace up, and that's the powerful trade. I think you got a chance for this thing to do a flush and really start forcing some people out. Let's look at the weekly. Beans kind of has a mind of its own once it starts getting momentum in one way here. There's that 915 area that was just massively critical for a long time. And I feel like that could easily be met and maybe even lower. So let's get below 945. You've met some targets here, and then let's put the stops in above 945, and let's try to hit 915 on that trade. The dollar, par for the course. The market's like that. They think Hillary's just going to keep everything together. So the dollar's getting a little bit of a bounce off of that. Gold, we talked about this earlier, but I want to revisit some numbers here. 1331.33 is big, huge numbers, huge support on this, and a lot of support. 31.33.35. We're getting a little bit of a sell-off right now in gold, kind of coming down. This is live gold prices here. But again, getting down into that area and popping back up, I think you've got a decent chance to scoop this up now on the gold side. There's that 933. We reached a low right then on that spike down of 1333. Here's the low 1332 right now, and kind of popping off of there. So glad to see that happen, actually. Excuse me. And we're going to take a look at a couple of other instruments here. I had a nice talk with Tom yesterday afternoon about some things that we're involved with on the automated trading side, automated signal side. And we're going to continue to talk about that moving forward. 6 products in that particular basket: crude, gold, S&Ps, euro currency, beans, and the 10-year. Gives you a nice exposure. A lot of different time frames going on with those particular signals, and I'm pretty proud of what's happened there. Really good results. And here's the 10-year. Again, this has been something to stay away from on the short side. We've talked about that, not interested in selling that. Now we've kind of reached some targets above, and this global slowdown type attitude going on. That they're going to latch on to any type of news they can on that scene, they being Janet Yellen and her folks. So, rates are going down again, 10-year's going up. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And I didn't see your note, Al. I think Tom's on the phone with us.
What's going on?
Hey, man. God, did you catch the debate?
Huh?
Did you catch the debate?
I did. I had my popcorn. I caught the debate. Yeah, I did, man. I did.
Wow.
And you know, I'll tell you, you know, I'm not for Trump, but it cracked me up that everyone was saying that Hillary won the contest because I didn't think that. I'm sitting there saying, man, I don't know what they were listening to, but you know, I wasn't expecting politicians to answer the questions, but I don't think she won it at all. I don't even think it's close, which is really, you know. So I think these perceptions are going to be all different out there, man. But I kept flipping around the channel. They, you know, both channels, my Fox and the CNN, and they're saying that Hillary killed him. I said, man, I didn't see that at all. So I think it's a race, man. You know, I do. So.
You know, it's interesting you say that because a friend of mine here, we were kind of texting back and forth during the debate, you know, cracking jokes, things like that. He's he's not a Trump fan either, and Trump's a scary guy. Let's just, you know, he's.
Yeah, listen, I don't like. The bottom line is that we have terrible choices, right? But
yes.
I'm in the same bag. That it's like, okay, man. But in that same context, though, man, he didn't. I don't think he lost. I don't see it. If anything, it was like, because a lot of those things are just freaking common sense, man. We know we've got a government that's, you know, basically out of control that doesn't do anything. So
he saw the same thing you saw. I mean, he's not a Trump fan, and you know, it was like, this is over. You know, Trump's going to win the election now, and you know, but you know, as it kind of went forward, he kind of started digressing on these little small details, and that's what I was thinking was going to happen. I said, you just wait. He's got a chance to grab defeat from the jaws of victory. Don't worry, you know. And so he, you know, it kind of, he was kind of thinking the same thing you were thinking, and I was a little bit more slanted that way. But they were just ripping him up on these shows afterwards, and
they were, man. Yeah. They were. I'm trying to figure out. They're just trying to make him just, you know, push some advertising because it's like, I was looking at it from a media standpoint. It's like, you know, that's the quickest way to have the guy buy some advertising.
I was watching MSNBC right after it, and all they could come up with was, well, he interrupted her many times, and I was like, well, That's
That
one
was
negative,
crazy.
I guess.
Yeah.
But,
Yeah, but it's not even close. You're running for president. That's a bunch of garbage, man. Anyway, hey, let's make some money with your new system. That's what we want to do.
Yeah,
because
no, thanks
guess what? The market is the one that factually will check you all the time.
Yeah. And no, I mean the good news about thanks for bringing me on yesterday to talk about that. I've been wanting to talk about that for a while. Thank you. And one of the things that kind of having that exposure in all six of those systems or all six of those products at the same time,
Yes.
it just kind of massages it forward and in a kind of a step-by-step fashion, and it's not really like we talked about. I mean, it's not really built to hit triples and home runs. It's singles, doubles. These are the setups, different time frames. Looking at it on different time frames, excuse me, and it's just something that kind of keeps plugging away. And if somebody doesn't have the time to sit in front of the screens and wants to, kind of take advantage of some of the information that we talk about on a daily basis, that's definitely the way to go.
And what we're talking about, folks, if you come over to our website at TFNN, you're going to see right in the very top of the carousel, trade soft trade signals with auto execution. And if you can come over there, what you're going to see is that when John's talking about, we're talking about 6 different instruments that the TAS system's going to be trading, and it's all automatic. So if you'd like some information, just check it out. You can put your first name, last name. Jeff Sabbath will give you a call, or you can actually call Jeff anytime you like at 708-655-7552. The market it's gonna be wild. Watch this whole thing shake out, because I know before I had you on, I had Steve on, and he was talking. He brought up the 2 different cycles. So I just what. Combining these 2 things is going to be like a trip, man. You know what I mean? Because the way that it looked like when we brought him up is that if Trump was going to be, and of course this is just a cycle, folks, but the bottom line, if Trump was going to win the presidency, the market was going to go down almost to that point. If Clinton was going to win, the market's going to be going up before that. So this is going to be wild watching this thing shake out, man.
Yeah, let me get this. Windows is trying to update here while we're talking. I know the volatility is going to be here. That's the good news.
It is.
And on those 6 different products in that portfolio kind of exposure thing, all those particular products are going to have volatility based on, except maybe beans are not going to be the wild west, but I mean you never can tell. I mean, and those things to me look like they're getting ready to fall off a cliff here, and I'm sure we'll catch that based on some of the things going on with the profiles. So, if that happens, it happens. And that's kind of an outlier of the political volatility, but we got that grain component in there too.
Yeah. So. And, it's going to be interesting to see what happens in this metals market, because for some reason, as soon as that market opened up, I heard that. I mean, that thing dove down pretty quick. So it's like, okay, why? Why? It's like, I don't know. We'll find out.
It really just hit that support level that we've been kind of talking about, 31, 33, and just kind of bounced off of it. So
it did.
And if the odds are out there, stay the course, Hillary might have the edge, a bigger edge now, whatever. I mean, gold theoretically, I guess, should be selling off, and it's right. I mean, that's my.
My take is that. The dollar wants to go higher right now and wants to sell off anyway, but politically I can't figure out why. I mean, they're both going to get, no matter how many times any politician says they're going to have less debt, we know we're going to have more debt. Everyone just spends money.
Right.
Just it depends on what they spend it on, you know what I mean? So.
Yeah.
Yeah,
I mean, I just don't see how gold can go down based on, where things are at right now and the uncertainty. So I don't know what's your outlook on gold, long term right now? Is it just kind of sideways or?
No, I'm looking. That Brexit day seems to want to get hit, but a couple of the equities have already been down there. A couple of them did a 61% retracement from their January to May highs, and I'm thinking, a few more of them are going to do it. It's very unusual that when only basically 4 or 5 of them do it, out of a good 30 or 40 of them. It just doesn't, because they're all in the same business. So it seems like one catches up with the other, catches up with the other, catches up with the other. Do you know what I mean?
Right.
And
Right.
and I think, my larger take so technically that's my take. Fundamentally, my take is that the Fed's going to keep saying they're going to raise rates. That's going to have the market go down. The market goes down, and the Fed's not going to raise rates. So it's going to be like the buy of the century again inside the metal market, because it's like the metals get hit because, yap, we're going to go up on rates, and all of a sudden, December comes, we don't go up on rates, and then we see another run that's like extraordinary. So that's how it seems to be playing out.
Well, Tom, thanks for coming on.
Okay, man. Well, listen, you have a great one, a safe one. Thanks.
All right, man.
Congratulations on the new program. It's awesome, man.
Thanks, Tom. Okay, we'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. We're going to check some things. RJP, thanks for bringing that up. Had a little discrepancy on the 10-year versus scanner. I'm having a couple of guys check the entire universe there on the future side. There's so many things going on here. Sometimes we have a little bit of a technical glitch, and thanks for pointing that out. But I've got 2 guys literally that I pay and just to sit there and watch this. We're going to take a look at the currencies in the meantime. Hold on just a second. trying to get this straight for you, for guys who are scanner subscribers. There's a lot of moving parts going on with that thing. Okay, so let's just kind of hit the currencies really quick. All right, cool. We're just looking into that together. Here we go. Euro. So dollar rallying a little bit, obviously somewhat of an inverse relationship here. Not totally one for one, but 112.48.49. Never really got a daily close above there. This is the daily on the euro. British pound, really scary little situation here. Could use that now. We had, really a strong close below profiles last week. 130.19 kind of rallying up into it. Looks like we're going to stay below there. The yen, this is the scary trade. And having this profile appear above price action yesterday, really bad news for this thing. And compressing down into this 134. This is indicative of a possible let's just get everybody out of the market. And you never know when those things really stop moving down. So I'm expecting kind of a draft down on this. If it doesn't happen, it doesn't happen. That's okay. But, then you're going to kind of wait for some new information to take that trade off. Aussie dollar really just peachy. Loving how this thing's acted. This week, we kind of got back up into that area, 76.80, 89. Got to take some weight off when we get into those types of areas. I'm still trying to keep some long on here. Here's the reason. Just kind of staying above profiles on the daily, looking for this thing to kind of ratchet up. Canadian dollar, there's no mystery here. I'm sure Larry will speak about it. Just becoming a devalued situation as the hope for oil rallying is probably just dissipating right now. And as you know, these guys dig holes and sell what's in it. So the Canadian economy may suffer a little bit here, and the currency would definitely be a byproduct of that. Let's see if I can pull up some stock charts on this. Yep, can do it. Good. All right. So Apple got some prints this morning, 113.15. Again, I'm looking for this to kind of get back in the 105.5, 110 range. Nothing doing right now on Apple. Facebook, we talked about probably not going to suffer too much when it comes to, where are people going to go? I mean, they've got, 1/6 or more of the Earth's population that have logins to this thing and use it on a regular basis. So is it 1/6? It might be 1/5 now. So, where are they going to go? I mean, what's if there's an advertising mathematical error, big deal. Facebook's got everybody by the kahunas here. And I just think you got to look at this as support again. 126.32. It's kind of like an Amazon situation. Trying to order stuff online. I mean, you guys know what I'm saying. They just drive you right into this thing. So here's the 240s on Amazon. Talked about the short-term support 797. Pre-market, it's rallying back up at 804 on Amazon. These are two stocks to not short. For God's sake, don't short it. The reason I look at IBM quite a bit is I'm kind of interested in IBM and Microsoft. For some of the technology that they've been working on and some of the different ways that they've been organizing themselves. IBM, I'm not technically super excited about this at this stage. We've got below this 155.56. Can't seem to get a weekly close above. So this is not a long at this stage. But, we've even spent a little money on Watson and some of the AI over there. You ought to check that out. I mean, they've got a couple of different sectors. I'm sure David White's probably talked about this at one time or another, but different kind of categories of the AI within Watson. If you go to IBM Watson on Google, check it out. They've even got a section where you can actually play around with, for all intents and purposes, the financial markets and do a little back testing. Check it out. There's a little more to it than what I'm saying, but interesting AI for lease, kind of a learning situation, machine learning situation. I'm going to find out if they've finished with the futures server here. All right, we're going to leave that alone until break. Let's take a look at Netflix. This is one where we're pretty interested in, having this thing get down below 918 and then keeping the stops in force above that and trading it down into 88.35. That's still the course on Netflix. A couple other things going on here. BlackBerry says they're 2/3 of the way through the turnaround. Big deal. I don't know if anybody's looking to pile into BlackBerry right now, but that's the latest news on it. Let's take a look at Mylan. You guys know all the news stories on this one. Just to get an idea what's going on here. It looks like we're trading about 41, 46 this morning. In a stock like this, that's news-driven, this is kind of the cool scene when it comes to looking at profiles, especially on a long term. As you can see, these things are nice inflection points to pay attention to. 43.67, kind of got that just gift rally up into those long-term inflection points to whack it again. And remember, this profile appeared above price action. We talk about that all the time. 41.05 is where it looks like we're trading this morning. So the next breakdown sell-off point on this one's getting below 40.26, but I think it can easily trade down to 40.26 from here. The powerful trade was this one, the 43.67 trade on Mylan. Okay. Just reading it in there. I think we're going to hit break now. And when we come back, we're going to take a look at a couple other stocks. Home Depot in particular. We talked about this one the other day, getting back up into this 129.55. And here's the long-term weekly on it. So still got some downside here on Home Depot. Guys, we'll be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We're finishing up with Home Depot. Again, this was kind of on the downtrend resistance on the scanner. Just want to revisit this. We have the breakdown. We're looking for areas to kind of hit it again. And the scanner kind of picks out these little deals here, 129.55. Nice little trade. Wouldn't have even looked at it or paid attention to it unless it had shown up on the screen here. So let me look at the 10-year here. See where we're still fixing that RGP. I'm sorry, it's not up yet on the 10-year. We did a little research. That's the only thing that we've got a little bit of a glitch right now in the scanner. So a lot of mixed bag situations out there on the S&Ps when it comes to breadth calculations. Not a lot of direction one way or the other. I think you're in a sideways market right now. You got a lot of unknowns out there. Even with the guys yapping on the tube there, kind of, I think, I'm with Tom. When I kind of left it last night, talking about the political scene that might be affecting the S&Ps, I was, texting all night long as it was unfolding, with a hardcore not Trump fan. Not that he thinks Hillary's God's gift to the country or the political world, but he was just ready to go to bed. He said this thing's over. We kind of consolidated the views. Like it was at worst a draw, and we kind of thought Trump win, even with the the digressions and the rabbit holes that he went down But there's a lot of other unknowns out there right now, other than the political scene, to affect the S&Ps. And I think everybody's just kind of in a wait and see situation, and that's why the 10-year is just kind of moving up, because there's not a lot of green shoots of fundamental satisfactions out there for the marketplace right now. So again, I think to put it in a perspective here, I think the S&Ps are just kind of going to churn around here, and that happened for a good while. Let's just go back. Let's see if I can get futures on here. I think they'll be delayed on this terminal. Yeah, these are 15-minute delayed that I'm showing you right now. Yeah, but here's that 2033. Let me make sure we've got the right thing here. Yeah, 2033, a big number there. That's a real big number, actually. So you've got that. We've hit it. We've hit 2133 is a big number. We've hit 2133 this morning, bounced off of it to the tick, if you can see that. So your inflection points, really, the big ones are 33 down below, 49, 50 up top. Just not a lot of direction here on the S&Ps, and I don't feel extremely comfortable taking a big stance either way. So how do you trade a market like that? A lot of times you can get some clarification drilling down into the underlying instruments. But, the real kind of clarifying the air, however you want to coin it, is when the market moves one way pretty significantly, and then you can kind of find opportunities in the scanner, things that aren't really jiving with that particular move in that one direction on a long-term basis, and then you kind of got some things that are showing themselves early. So let's do this. Let's take a look at just simply some stocks that might have broken out. Let me just make sure we got our population here right. So I'm going into the S&Ps and the NASDAQ, and I'm looking at stocks that kind of on a daily, weekly situation might have broken out. AIV, there's just a massive move this week in this particular stock, getting completely above recent highs and above profiles, 46.95. If you're into trading breakouts, that's where you kind of got to say uncle at that particular inflection point on the way back down, or wait till the market comes to you on something like that. AutoZone, AZO found a little support there. I think we talked about this one actually this past week. AZO kind of changing, getting some support at 745. Pinnacle West, let's just take a look at this one. Yeah, maybe not the best one to trade there. Let's take a look at breakdowns. So a lot more stocks on the radar screen when it comes to breakdowns relative to breakouts. This is as of yesterday's close, these weekly and daily numbers. So this morning we are, we're about unchanged right now from yesterday's close. So a couple of stocks that just started getting a little heavy and kind of changing into a breakout mode. Checkpoint Software. Yeah, this is an ugly situation, and I think this thing could have some more legs going down. CHKP. Let's take a look at Ford Motor Company. Yeah, you might have better shorts than that. General Mills. We talked about this one the other day, being the short, kind of don't be a hero type thing. We broke down, and then we talked about, let me blow this up. We talked about being able to hopefully get a leverage point somewhere on the new daily profile based on that breakdown 65.85. That didn't happen, so we again have to trade the breakdown below the profile 64.50. General Mills. Here's JP Morgan. Let's just take a look at this one. All right. Yeah, the XLF. Let's just take a look at that first before we talk about any bank stocks. Coming down into support on the weekly. This is the situation on the XLF. There's that 1905 we've talked about on the XLF, and this could go. I'm looking a little heavy relative to the market here, underperforming lately, and the 10-year's going up, yields going down. Yield curve, or excuse me, the spread on the yield curve is not what these guys want to see, tightening up. That's something to think about here, because they had their hopes and dreams on rate hikes, and now that seemingly is, again, we're day trading. The Fed's day trading the ability to raise or lower rates. So now the latest seen in the past couple of days is, the economic figures are not good. Blah blah blah. So here's Wells Fargo. This is the weekly on Wells Fargo. Again, nice situation here. We talked about trying to sell resistance areas on this one. And again, I think a couple more shoes are going to drop on Wells Fargo in general. So I think this is going to be the eternal short for a while. Let's take a look at JP Morgan. Yeah, this is the Jamie Dimon Teflon coated situation. They'll figure out a way to wring some more money out of folks via paying a fine and keeping the profits on the scam. Did I say scam? We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
There, we're going to try to get back on our regular server here. Sit tight. I'm gonna pull up SWN here. Sorry about that. Let me see if we got it. Okay. On our e-signal, we've got a couple of discrepancies we're looking at. So SWN, right now you've got really decent support, 1356 down into 1335. That server I was showing right then on the e-signal was our currency server, which doesn't exactly have this data. Here's the situation on SWN on the weekly. Again, kind of had that lid recently on the long term around 1485. Here's the daily again. Got a decent floor down there. Support area 1335, 1356. So what does this all mean? I think it's held up relatively well with crude. The impending, downside news now after some talks are kind of getting dismantled. Iran and Saudi Arabia talking about cutting production. That might not happen. I think the oil market, probably should have been higher based on even the hopes of that. Now I think they're just going to jerk the rug out from under it. So I don't know about really buying anything in the oil sector at this minute. You might be able to catch it a little bit lower, just based on, the default reaction a lot of times to crude in general. But SWN, if it hangs in there, And we do have an oil kind of sell off here in the 41.39, was it? That unfair low on the weekly on November crude. If this hangs in there, man, I think you got to look at this as then you got to pick it up in this support area and try to I think we got day before yesterday we got down into that support area and kind of bounced up a little bit, but got to keep your eye on crude, unfortunately, on this one. I don't know if that made any sense. I hope it did. We're going to take a look at Tesla really quick. Daggone it. Sorry about that. Waiting for this little thing to come up. Let me go back into our scanner here. There we go, 202.58. So here's Tesla. You know, we talked about kind of a range before. We talked about 233 down into some lower numbers. The weekly really has no floor down there, but on the daily, you know, you kind of start breaking above profiles. You kind of have a chance to retest them. I'm just not a fan of being long Tesla, but right now you're looking for another reason to short it. It kind of broke through that daily regulation of the trade down on Tesla, so that's the story there. Let me get the right symbol up there. Stock I was really pretty longish on, but when you get into these areas up top here, like 182.27, like last week on 3M, you've got to be willing to take some weight off. You never know what's going to happen around these areas. This is also kind of recent highs, so we're kind of back in the balanced area. And I was trying to nibble there yesterday, or excuse me, day before yesterday on 178. Now I still think you've got a decent place to buy this 175.35 on 3. I'm trying to block out the short side on that one. Guys, you've been great. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.